1. Why recessions hit retirement plans. Hardest recessions don't announce themselves. They arrive like storms, sudden, brutal, and unforgiving. And when they do, retirement plans suffer first. If you're in your 50s or 60s, you don't have the luxury of waiting 20 years for the market to recover. You need protection now. Most retirement portfolios are built on hope. Stocks will keep rising. Bonds will stay safe. Inflation will stay low. But what if that's no longer true? In 2008, retirees lost decades of savings. In 2022, inflation destroyed purchasing power silently. What's next? That's why your XRP and IRA can't be just about chasing the upside. It must be engineered for resilience. Recession-proofing means shifting from growth at any cost to protection with intention. Because retirement isn't about gambling for the top. It's about making sure you still have what you need when the world turns upside down. Your XRP Roth IRA isn't just a digital wallet. It's your future cash flow, your peace of mind, your family's financial anchor. Don't wait for the headlines to tell you it's too late. Build for defense now, while you still have time to choose, not just react. Two, how XRP adds a layer of protection in IRA. Most people still think of XRP as just a coin, a gamble, a bet on price. But those who study deeper, especially retirement investors, see something else. XRP is infrastructure. While other crypto projects chase hype, XRP focuses on what matters: speed, low cost, and global settlement. It's one of the few digital assets used by institutions, not just speculators. That's what makes it powerful inside a retirement strategy. When you hold XRP and IRA, you're not just holding hope. You're holding a utility-based asset that moves value globally in seconds without a middleman. And when the market shakes, XRP's core use case doesn't disappear. In fact, its real-world function becomes more valuable in times of economic stress and capital movement. A well-structured crypto IRA XRP allocation doesn't rely on hype. It's built for quiet resilience. It offers a layer of protection against currency debasement, against inflation, against systems that move too slowly in a fast world. You don't have to go all in. But if you're looking to build a retirement portfolio that can withstand the next 10 years, XRP deserves a seat at the table. Not as a wild card, but as a shield with purpose. 3. Signs. Your portfolio isn't recession-proof. Look at your retirement portfolio today. Is it mostly stocks, bonds, cash in the bank? If yes, you're more exposed than you think. Stocks can drop 30 to 50% in a crash. Bonds, once considered safe, now lose value when interest rates rise. Fiat money, the dollars sitting in your account, are being eaten by inflation year after year. You may not feel it now, but during a recession, these cracks become earthquakes. Many retirees in 2008 thought they were safe, until they lost 40% of their retirement overnight. Diversification wasn't optional, it was survival. So ask yourself, do you have an asset that behaves differently when the world panics? That's where a well-balanced XRP Roth IRA comes in. XRP doesn't move like traditional assets. It's decentralized, borderless, liquid, and fast. And inside a Roth IRA, gains can grow tax-free, a rare advantage when markets are bleeding red. Diversification means adding something outside the system, something that doesn't follow the same script as everything else in your account. XRP in IRA isn't about hype. It's about building a safety net the traditional system forgot. If your entire retirement plan depends on Wall Street behaving, you may not be recession-proof, but you can change that, starting now. 4. Tax-free flexibility. Inside XRP Roth IRA, when recessions hit, most investors freeze. They're trapped, can't move, can't adjust. Every change triggers taxes, penalties, or fear. But not you. Not if you've built a smart XRP Roth IRA. Inside a Roth IRA, your gains aren't just growing, they're growing tax-free. And more than that, you gain flexibility. Want to reduce risk? Shift a portion of your XRP into stablecoins. Want to lock in some gains? Rebalance without triggering a capital gains bill. You don't have to sell everything. You don't even have to leave the market. You just need to adjust. Smoothly, quietly, and legally. This is where traditional retirement accounts fail. Every move is paperwork, delay, or tax drag. But inside a crypto IRA XRP structure, you move with speed and clarity. You stay inside the system, but outside the stress. This isn't about being reactive. It's about being ready. Your XRP Roth IRA becomes more than a crypto bucket. It becomes your financial steering wheel when everyone else is stuck in the storm. While others scramble, you rebalance. You protect. You move forward. Tax-free. 5. 3 steps to rebalance before the downturn. You don't need a financial advisor. You don't need a degree in economics. You just need 15 minutes and the courage to act before the storm hits. Most people wait until it's too late. The market crashes. Panic sets in. They freeze and lose. But you're smarter than that. Here's how to rebalance your XRP and IRA before chaos begins. Step 1. Log into your crypto IRA provider, whether you use iTrust Capital, BitIRA, or another platform. Access your account now, not next month, not when things calm down. Step 2. Review your current XRP allocation. How much of your retirement portfolio is in XRP? Is it aligned with your age, your goals, your risk tolerance? Too high? Too low? Get clarity. Step 3. Shift if needed. Up, down, or to stables. You can increase XRP exposure if you're underweight. You can trim if it's grown too large. Or you can move a portion into stablecoins without triggering taxes inside a Roth IRA. This isn't market timing. This is retirement strategy. Because the moment the crash begins, you'll wish you had acted. Don't wait for the headlines. Rebalance today. So when the downturn comes, you'll be ready, not rattled. 6. Why crypto IRA? XRP offers silent defense when stocks crash. They make noise. You see headlines. You feel the fear. Your broker calls. Your screen bleeds red. Volatility becomes violence. But not XRP. And especially not XRP inside a crypto IRA. XRP doesn't shout. It doesn't send alerts every time the Fed speaks. It moves in silence. Not because it's weak, but because it's independent. Inside a well-built crypto IRA XRP structure, there are no forced liquidations, no margin calls, no quarterly panic from Wall Street managers juggling portfolios. You're not exposed to the drama, you're positioned for defense. This is what most retirement investors never hear, because traditional brokers won't tell you. They don't offer XRP, they can't explain decentralized value. They're STI, but your retirement isn't a place for outdated models. It's a place for peace. And peace comes from positioning, not predicting. XRP in IRA is quiet for a reason, because it doesn't need to scream to protect you. When others react, you remain calm. When the system shakes, you stay balanced. That's what silent defense looks like. And that's what smart retirement investors are building now. 7. Setting. Exit rules before panic begins. Panic is loud. It makes you click, sell, second guess, and almost always, it makes you late. But retirement isn't about being fast. It's about being prepared. That's why every XRP and IRA retirement strategy needs one thing most people never build. Clear, simple exit rules. Not guesses, not emotions. Rules. If XRP hits $5, move 10% into stablecoins. If it reaches $10, trim 25% inside the Roth IRA. After a 3x gain, shift some to cash. No questions asked. These aren't predictions. They're protections. They turn chaos into calm. Because once markets start tumbling, you won't have time to think. Your brain will scream, the news will shout, and you'll freeze, just like millions did in 2008 and 2022. But with rules in place, you won't guess. You'll act. Quietly. Confidently. Tax-free inside your crypto IRA XRP account. Structure replaces stress. Discipline beats drama. And this is how real retirement investors stay in control, even when the world spins out. Set your rules now, write them down, review them yearly, and when the next wave hits, you'll already know what to do, because you planned before the panic. 8. Building a buffer with stablecoins. People think cashing out means giving up, walking away, missing the upside. But that's not what we're talking about. In your XRP and IRA, you don't need to sell everything. You just need to build a buffer, a cushion, to protect what you've earned. That's where stablecoins come in. Moving a portion of your XRP into USDC or similar assets doesn't remove you from the market. It parks your gains safely, still inside your crypto IRA, still tax-free if you're in a Roth structure, but away from the next wave of volatility. You're not leaving the table. You're just protecting your seat. This buffer is your calm zone. When others panic, you hold steady. When markets dip, you have dry powder, ready to redeploy without stress or fear. And here's the beauty. In a crypto IRA XRP setup, you can shift into stablecoins without triggering capital gains. No penalties, no tax bills, just strategy. This is the silent advantage your traditional broker never taught you. Retirement isn't about timing the market. It's about staying in control, with structure, safety, and smart moves. Build your buffer, buy yourself peace, and prepare to act, not react, when others are scrambling. 9. Reviewing your XRP strategy. Yearly retirement isn't a one-time decision. It's a living strategy, one that evolves as you do. That's why at least once a year you must pause and ask the hard questions. Is your XRP Roth IRA still balanced? Are you overexposed in a bull market? Or underpositioned when opportunity knocks? Do your targets still reflect your age, goals, risk comfort? Because life changes. Your health changes. Your income, family needs, and market outlook all shift over time. A smart XRP and IRA strategy isn't static. It adapts, not out of fear, but out of intention. Maybe it's time to move 10% into stablecoins. Maybe it's time to increase allocation before the next wave. Maybe you've reached your number, and now it's time to protect. Whatever the answer, it won't come by accident. It comes by review. Review creates clarity. Clarity creates confidence. And confidence is what protects your future when others are guessing. Set a yearly check-in on your calendar. Sit down, log in, assess, adjust. This simple ritual could be the difference between a retirement full of stress or one filled with peace, flexibility, and control, all the way to 2030 and beyond. 10. Act now, not after the crash. No one saw 2008 coming. No one expected 2020. And when 2022 hit, many thought, this is temporary. It wasn't. The truth is, you don't need to predict the future to protect what matters. You just need to act while you still can. Building your XRP and IRA Roth. IRA retirement strategy today isn't about market timing. It's about clarity, control, confidence. Because when the next crash hits, and it will, you won't have time to scramble. You'll either be prepared or panicking. While others beg their advisors for answers, you'll already have structure, rules, buffers, peace. You'll know where your XRP sits, how much is protected, and what steps you've already taken to make your retirement resilient, tax-free. This isn't about fear. This is about foresight. Because the most dangerous strategy of all is doing nothing. Your future doesn't need more hope. It needs action. Now. Not after the headlines. Not after the sell-off, not after the regret. You've waited long enough. Recession-proof your XRP retirement account today, so when the world shakes, your peace stands firm.